Did you know banks can profit when mergers completely fail? Some banks are secretly charging up to 25% breakup fees on deals that go south, making millions even when things go wrong. You won't believe how banks are making you pay even for their mistakes. Learn the shocking truth in this video. Banks are more than just places to store your money, they're businesses that aim to make a profit. One major way they do this is through interest. When you deposit money, the bank pays you a little bit of interest. But when they lend that money out as loans, they charge a higher interest rate. That difference, known as the interest rate spread, is a key source of income for banks. They have to carefully manage this spread, because if the interest they pay on deposits gets too close to the interest they earn on loans, their profits shrink. Banks also make money through fees. You might get charged a monthly fee for your checking account, or fees for things like overdrafts or using an ATM that's not in your bank's network. These fees can add up and provide a steady stream of revenue, especially when interest rates are low. Wealth management is another area where banks generate significant income. They offer services to help people manage their money, plan for retirement, and invest. In return, they charge fees based on the amount of assets they manage or commissions on investment products. Then there's investment banking. Banks provide advice to companies on things like mergers and acquisitions. These services comes with hefty consulting fees, even 1–2% of deal value. In addition, they also receive compensation for various investment decisions for their clients' portfolio. Banks play a big role in capital markets, which is where companies raise money by selling stocks and bonds. Banks help companies with this process, called underwriting, by finding investors to buy these securities. They earn fees for these services. The economy has a big impact on banks. When the economy is growing, interest rates tend to rise. Banks can earn more interest on loans, which boosts their profits. However, if interest rates climb too high, people might borrow less, which could hurt the bank's lending business. Higher interest rates benefit US dollar since the investors will turn to high-yielding dollar-denominated investment. Venture lending is another area, but it's riskier. Venture loans are given to new or growing companies that may not have a proven track record. Banks need to manage the risks associated with these loans very carefully. They'll look at a variety of factors like whether they're early stage and expansion stage, the state of the company. Also, banks that offer loans to new or growing companies need to perform checks such as monitoring the money going in and out. These are a few of the potential and well-defined weaknesses of lending to venture. Looking ahead, banks face many challenges. They need to modernize their technology and keep up with changing customer expectations. Many are looking for new areas to make profit, such as non-interest income sources. Regulatory requirements also have an effect. Banks have several options to grow non-interest income, especially in the following business lines such as retail banking, payments, wealth management, and investment banking and capital markets. The transformative potential of AI in banking is becoming a reality. AI could propel global banking industry profits with AI implementing machine learning, neural networks, natural language processing, and generative AI tools. Banks also may need to prioritize boosting non-interest income due to pressure in 2025. Deposit costs are expected to remain elevated despite rates coming down. It's important to remember that the financial world is constantly changing, and there's always more to learn about how banks operate and how they make money. One area we didn't explore in detail is the ethical considerations of some banking practices. Are the fees that banks charge always fair? And how does their lending activity affect different communities? Another question is, what are they doing for the environment and global sustainability? These are important questions to keep in mind as you continue to learn about finance. By better understanding the financial sector, one can make informed choices and be able to make educated decisions for your wealth. If you found this video informative, please like, share, and subscribe for more finance-related content. We will keep producing great content such as this for your better understanding.